Hey guys, it's Crossroads here. Today I wanted to talk about why and how I'm betting against Apple. Now, you may not know this about me, but I do not short stocks directly. I think that there's too much risk for individual investors such as myself. There's just unlimited downside. So sometimes I do buy puts, but that's not what I'm doing here. Instead, what I have going on is a gentleman's bet with Stephen Fiorillo. And you may know him on X. He's a great follower, a great friend as well. The bet is this that from today, where Apple is trading at, we are looking at 195.27. We are betting that over the next 5 years, that I think that the S&P 500 will outperform Apple over 5 years. Steve takes the other side. He says that Apple will actually outperform the S&P 500. And it's just a gentleman's bet. You know, there's no money exchanging hands. We're just donating a small sum to charity, whichever one of us is the loser. So look forward to losing and giving to a charity I love, or winning and being right. I like both of those. But why am I taking this side of the bet? Well, specifically, I see Apple as one of the weakest in the Mag 7 by far. And I think that over the next 5 years, could happen a little bit later than that. I think that there's a chance that Apple falls out of this Magnificent Seven idea. And there's a few reasons for that. Now, one of those is we're going to look at the metrics here. So Apple is quite expensive, and we can see that here from a valuation standpoint. You can see the PE right now is 30.47. And you can say, but wait, Roy, there's more expensive Mag 7 stocks. Yeah, Tesla is definitely way more expensive in this valuation and most valuations as well. But a lot of them are not. And look at something like Google, which is the most undervalued. Frankly, I'm not excited about Google, but it's about half as far as a PE ratio. And you can see the forward PE ratio is not that much different. The reason why is we look over here, 3-year revenue growth, 0%. Well, that's not so good, is it? Now, they do have profits growth. Some of that is through buybacks, certainly as well. Profit improvement is actually decreased. And you do see over the 1 year, they are actually growing revenue very slightly. It's in single digits, but this is not great growth at all. And there's a reason why. That basically, and we'll talk about the innovation here in just a second, but there's a lot of issues with Apple. So if we look at just iPhone revenue, I know that this is just one of many revenue streams, although it's a very important one. You can see it peaks in quarter 4. There's a seasonality factor, but largely it's not improved. Let's look at it over the yearly time frame. You can see how flat this has really been since 2021. I know that some bulls, like Dan Ives, has been expecting a super cycle for iPhones, where a lot of people say, hey, this next phone is really good, compelling people that are holding iPhones back in from 2021, 2022 to finally refresh their phones. But that's not happening, and it may not happen at all. I know in the past people have thought that too, but they've really gone downhill in terms of this. Now, something that's working very well is services. It's harder to see over a quarterly standpoint, but over a yearly standpoint, you can see, man, this is just up and to the right. If this was their only side of business, it's doing great. They have quite the moat here too, just because there's significant lock-in. But the challenge is this right here. If iPhones are not selling, and that's usually the entry, the gateway into the Apple ecosystem, and that continues, at some point, this is going to begin to taper off. Now, I'm not expecting a sudden decline or anything like that, just that this slowing at the same time as iPhone revenue actually stagnates or decreases. And it's not just top line revenue. We do see top line revenue here. It's just, a struggle that they had the sugar rush in COVID. And since then, they've failed to really iterate beyond that. Net income, in fact, you can see is declining. And if we look at the cash flow, it's really not much better there at all. You can see free cash flow has been very choppy. Operating cash flow is actually doing a little bit better, although it did peak in 2022. And so there's definitely some issues. We're going to also talk about cash and debt here too, but you can see an overview right here that Apple is known for whatever reason as a cash cow. It does generate a lot of cash. It absolutely does. But look at that debt. They have a significant amount of debt. And all of a sudden, some of this debt is a lot more expensive to refinance. Now, the good thing for them is they are decreasing their debt, but also their cash pile is decreasing as well, even as their operating expenses continue to increase too. Yes, shares outstanding are going down, but it's not as fast of a rate as you'd expect here, just because this is a bit of a chart card. So as far as the cash, what's happening with Apple. It kind of reveals what's happening very slowly. This chart, there's a lot of noise over it over the last 15 years of the cash pile. But if we look at the cash change in the last 4 quarters, you can see it went down a pretty good bit. Now, this $7 billion negative, it would be huge for almost every company. For Apple, it's like, oh, it's just a flesh wound. No big deal. And over the last 4 years, we see it's almost $11 billion that they're down. And you can really see like this is kind of the trend. Even in their quarterly print, you can see it's usually negative. They did have a nice print back here at the end of 2023. And if we look at what's going on with comparison for the Magnificent Seven, as far as debt to equity ratio, Apple is in a league of its own and not in a great way. Now, you can see here, and this might be a little bit hard to see, but I have the Mag 7 listed up here. And this blue line that stands alone, the higher number, by the way, is the worst. Apple is in a league of its own as far as debt to equity. In other words, they have a lot more debt to their equity compared to all these other Mag 7. And you can see even the trend line of these Mag 7 companies that it's mostly down, even as they accelerate research and development, even as they accelerate CapEx spend, especially in the age of AI. Doesn't matter. They're going that direction. And Apple is trading here, which is not great. Now, to look at this in another way, we can see this in bar chart form, the average debt to equity ratio here of these companies. And usually, it's nice actually to see this chart of change. You can see that some companies, will start very high, like Amazon 20 years ago is just starting out. A lot of these didn't exist. So they had a lot of debt as they had to build things out. And that continued to decrease in terms of debt to equity over time. We see that as well with Tesla as they grew. And now they have a significant amount of equity and very little debt. Google, likewise, although Google really didn't start with a lot of debt to begin with. Microsoft, even though it's a much older company, you can see that trend, and Meta as well. The only one that's defying this is Apple. Why? Frankly, because they're not growing. They're not growing top line. They're not growing bottom line. The reinvestments that they made have become less and less, and it's just not working to help decrease that. If you look at this chart, you can see research and development for Apple has not increased significantly from where they were in COVID at the end of 2022 to today, especially if you account for inflation. Now, has there been any technological shift and change in the world since the end of 2022? Unless you've been sleeping under a log, yes, AI is real. AI is here. And Apple has AI, kind of, not really. They have really done almost nothing with it. They pivoted away instead from an EV project. They said, hey, these guys can work on our AI for us. It's not working. You can see that with their product release, with their announcements. Apple has basically been done innovating. Now, what are other Mag 7 companies doing? Well, I'm not going to go through all of them, but I'll just show you one because Google really does compare well against Apple in a number of things. And we see research and development for Google has actually increased quite a bit. CapEx spending, I won't go into that, but it's increased a huge amount as well since they're very serious about generative AI and deploying that across their entire ecosystem. Again, I'm not bullish on Alphabet, but I do think it's a good company that is performing well and is beginning to innovate at a more rapid amount. Apple has been in a tough place for a little while. Now, it's also seen in the stock here, probably least importantly, but this is a bet on the stock over the next 5 years. And if we are looking at a 5-year bet from over the past 5 years, it increased by almost 150%. We look at it over the last year, and there's a reason why it's basically flat. Year to date, it is down slightly. And I was talking about if I was shorting a company, I talked about Apple back in this range. I just said it made no sense that for whatever reason, the market was not perceiving the risk, especially with tariffs, on Apple itself. And so there's a couple other issues too. So we have a lack of growth on the front end, and we don't see the innovation that's really there. If you look at their products and their investment, they're likely not to launch anything that's going to cause this massive refresh cycle. And slowly, bit by bit, I think people might begin to pivot away from that very sticky Apple ecosystem, especially as more compelling products come out. So there's a couple of things that we need to look at in light of that. One of those is this announcement here. Now, we don't know what this product is, but it was an announcement that the iPhone designer has been recruited by OpenAI on a pretty massive deal that he obviously couldn't say no to. Could this be a phone? It absolutely could. Could it be something else? Yes, it could as well. But having that credible designer pairing with OpenAI, who is well integrated with the competitors and a little bit Apple, but not as much, and that's not a good thing for Apple at all. Speaking of things that are not good at all, this came out this morning. Donald Trump announced, I don't know if he calls it a post, a tweet, what it is, but he basically said, "Hey, Tim, I wasn't joking when I said I want you to build iPhones in the United States. And if you don't, you get a 25% tariff paid by Apple to the US." Now, ultimately, I'm against tariffs, and it's really weird to leverage tariffs against individual American companies, but that's what Trump is threatening. That's not a great thing for Apple at all. It puts them in a very hard place. They already had tariff issues as it was with China initially, although they backed off from some of those extreme tariff things. We're in a bit of a pause right now as they try to negotiate. But Apple was so terrified by the prospect of this that they flew 5 large planes full of iPhones from China to India and then flew them back. Uh, just shifting their production over to India, which is what the plan is not sufficient in Trump's mind. And as a result, iPhones could become a lot more expensive here. I don't think that that's fair or right to Apple, but if this happens, it's a massive, massive headwind. Even if they bring iPhone production here in the United States, there was a Forbes article that said it would cost $30,000 per iPhone. That's ridiculous, but it will cost significantly more, even with advances in AI and in robotics. And Apple, frankly, is just not at its peak. It's going to be hard for them to pivot here in the United States, even if it's possible. So that's a massive headwind as well. Now, another one was that last week they had a hearing with Google, and it's an antitrust case, and the DOJ is trying to figure out what they need to do with Google here specifically. One of the things that's being looked at is removing this partnership between Apple and Google, which frankly is mutually beneficial. In essence, Apple has allowed Google to be its default search provider on the iPhone and in Safari, I believe, as well, and to the tune of about $20 billion that they're given per year. Now, again, Apple makes a ton of cash. So losing $20 billion, and they won't lose the full amount because they can still partner with their Perplexities of the world or OpenAI or something else. But they will lose a lot of it. It's still not good. It's still another headwind, and it's very likely in that scenario that they are going to lose revenue year over year. And I think that that will continue as well. So they're in a very tough place. And at the same time, their competition, as far as smartphones and other devices, are actually innovating, I think, more rapidly than Apple. I think it's been for a while, but even a lot of Apple fanboys, maybe you're an exception, have seen and looked at the products as far as the Google Pixel that Google has been rolling out, the Samsung phone, and a few other smaller competitors. They say, man, why is it that these phones seem so far ahead of where Apple is? It's because Apple, its best days are behind it. Now, I am not predicting Apple to die or go bankrupt. I am not predicting Apple to just go to zero or anything like that. But I do think that they have peaked, and I think that they peaked in the past, and that this will continue to be a slow decline for a while. I have in mind with Apple that they're essentially the Ottoman Empire. If you look at the Ottoman Empire, you look at maps of it, it was this giant, massive empire that basically spanned most of the southern Mediterranean, the Middle East, and went into Africa, went into Asia a good bit as well. Very strong, very vibrant. And over time, they were not the same as they were when they were a young empire and country. They became disjointed. They became to the point where they could not really keep up with the speed of innovation that was happening. There was a lot of issues internally. And so on surface, it looked like that they were fine and they were massive. Finally, nearing World War I, they were called the sick man of Europe at that time. People knew that the decline was real and severe. And we saw that World War I and its pressures collapsed the Ottoman Empire. It was gone. It was done. That's going to happen, I think, to Apple, barring some seismic shift in change that I don't perceive right now. The current Apple is not capable of. And so it will be a slow, slow decline until at some point in the future, the Apple that we know may be out of the Magnificent Seven. And so, yes, I do believe that Apple will underperform the S&P 500 over the next year. That may not happen over the next year or two, but I do think that it's pretty inevitable. And so we see Apple right here It's weighted against 5.38%. So yes, it's going to be kind of a challenge just because if Apple underperforms, that will drag the S&P 500 and probably some of the Magnificent Seven at least for a little while until perhaps they have a little bit less of an allocation there, maybe something around Broadcom's 2%. Anyway, let me know what you think in the comments. Is Steve going to win this bet and Apple will outperform over the next 5 years? Am I going to win this bet? The S&P 500 is going to be outperforming Apple. Let me know if I've missed any bear or bull arguments as it relates to Apple. I'd love to hear it. Anyway, thank you for watching, commenting, and subscribing. And until next time, happy